Hi traders, you're welcome back to the Forex Geek channel. In this video, we're just going to be diving deep into one of the most powerful scalping strategies out there, and that is the supply and demand scalping. All right. So if you've ever found yourself entering trades too late, getting stopped out, or struggling to find the best entry points, then this strategy will change the way you scalp the market. Okay. By the end of this video, you'll know how to identify key supply and demand zones, the best time frames for scalping, entry and exit strategies to trade with precision, and mistakes to avoid when scalping supply and demand. All right. So make sure to smash that like button and subscribe to the channel if you want more pro level trading strategies. Okay, let's just get into it. Before we jump into scalping, let's quickly break down what supply and demand zones actually are. All right. Now, as for supply zones, supply zones are areas where sellers step in. All right. Supply zones are areas where sellers step in and push the price lower. So think of them as resistance zones where price struggles to break higher and usually reverses down. On the other hand, demand zones are areas where buyers take control and drive the price up. They act as support levels where price tends to bounce. So these zones are created when price moves aggressively in one direction, leaving behind an imbalance between buyers and sellers. So smart traders use these zones to anticipate high probability trades instead of chasing random price moves. Okay, when scalping, the goal is to identify these zones and catch quick reversals with minimal risk. But how do we do that? Okay, let's just break it down. Now, not all supply and demand zones are created equal. All right, not all supply and demand zones are created equal. Some work better for scalping than others. So here's how to spot the best ones. You should look for strong moves away. The best zones are formed when price leaves an area quickly with strong momentum. All right. For example, you can see what happened here. You can see how price left this zone with strong momentum. You can see the sharp drop, right, that happened. Okay, whether it's up or down, right? A slow drift away from a zone is weak. When you notice a slow movement, it's a weak movement and is less reliable. Then you should check the number of retests. Fresh zones work best. Okay, if price has already tested a supply or demand zone multiple times, it weakens over time. The first or second test is the highest probability trade. So in this case, you can see that we had the first test. This was the initial rejection, right? We had the first test, we had the second test around here. Okay, then use multiple time frames. If a supply or demand zone appears on a higher time frame, perhaps like the 1 hour, and then you refine it on lower time frame, like maybe the 5 minutes, it becomes much stronger. Okay, you can initially go to a higher time frame and identify a zone, and then you come to a lower time frame and then refine it and find the best entry points within that zone, right? Then you look for other blocks and liquidity zones. Institutions tend to place large orders in these areas, right? If you see wicks, you can see this wick we have here. You can see this rejection wick. If you see wicks rejecting a zone multiple times, it's a sign that smart money is active there. So once you have identified these zones, the next step is execution, right? Knowing when and how to enter trades efficiently. Now that we have our supply and demand zones, let's quickly talk about how to enter trades with precision. Now, the best entry technique is the retest entry. All right. So what you're going to do is you wait for price to reach a supply or a demand zone. Then instead of entering immediately, you wait for a small pullback or a rejection within the zone, right? Then you look for confirmations like a rejection candle. You can see what we have here. You look for a rejection candle, or you look for an engulfing pattern, or whatever rejection candle pattern, all right, that you can find. Then you enter your trade with a tight stop loss just beyond the zone. but not like immediately on top of the zone, right? You can give some pips above the resistance for a sell, or some pips below the support for a buy, right? Then for in terms of your stop loss and risk management, for supply zones, which are, short trades, you place your stop above the zone, some pips above the zone, all right? In order to avoid stop hunt. Okay, remember the stop hunt is real, right? Then for demand zones, for long trades, you should be placing your stop just below the zone, right? And remember, it should be some pips below the zone. Okay, not just directly under the zone, but some pips below the zone. Okay, then keep your risk to reward ratio at least 1:2. All right, for example, if you are risking about 100 pips, or perhaps let's say you are risking about 50 pips, or your potential profit target should be, okay, well, let me just use this as a very legit example. Let's say you are risking 20 pips, right? You can see, because this is below the support zone, or let's just call it 25 pips, right? So that we're gonna give some breathing space and avoid stop hunts. So just call it 30 pips. You're risking 30 pips. Your potential profit should be about 60 pips, right? So you can see that you can even take your profits around this resistance zone, right? So ensure you have a risk to reward ratio of at least 1:2, okay, for better scalping. All right, then for your take profit, aim for resistance zones for a buy, or support zones for a sell. And if momentum is strong, you can just trail your stop loss to lock in profits. Okay, so by following these entry and exit rules, you will avoid unnecessary losses and increase your win rate in scalping. Now, even with a solid strategy, traders make mistakes. So here are some common errors and how to fix them. Okay, the first is jumping in too early. Do not enter just because price touches a zone. Okay, always wait for confirmation before placing a trade. All right, it is necessary. And then do not make the mistake of ignoring the trend. If the overall trend is bullish, shorting every supply zone is risky. So do not be aiming at shorting a supply zone if you are in a bullish trend, or longing a demand zone if you are in a bearish trend. Okay, that is very risky. And then do not place your stop loss too tight. If you place your stop loss very close to the zone, market noise can take you out before the move happens. So give your stop enough room to breathe. All right. And finally, do not overtrade. Scalping is about quality over quantity. All right. So stick to high probability setups instead of chasing every small move. By avoiding these mistakes, you will increase the consistency of your trades and you'll become a more disciplined scalper. And there you have it, traders, a complete guide to supply and demand scalping. Now you know how to identify the best zones, execute precise entries and exits, and avoid common mistakes. If you found this video helpful, hit that like button and subscribe for more trading strategies. Comment below, do you use supply and demand zones in your trading? What is your biggest challenge with scalping? Let us talk in the comments. In the meantime, thank you for watching and I hope to see you in the next video. Happy trading.